Most traders lose money, and that's a fact. It's not because the market is out to get them, as some may think. It's because they're trying to get rich quick, and they're trying to skip the fundamentals, especially if you're a new trader, and go right to the punchline, green, day one. Guys, that's not how it works, unfortunately. If you're new, take a listen to this. You skip the process, you ignore the data, you let the emotion drive decisions. Trading is not gambling, and that's what you're doing if you're ignoring that. It's a skill that takes discipline, risk management, and patience. Hi, I'm Jeff Yates, and I've learned the hard way. If you want to stop losing and start learning the right way, hang tight for a second. Let me show you a few tips. Okay, I hope I've got your attention. Jeff, are you saying that I can stop losing if I follow you? That's totally incorrect. The problem is a lot of traders, new and experienced traders alike, they have a tendency to follow other traders, specifically on YouTube, chat rooms, and they're mimicking those trades, not letting emotion, at least initially, get in the way. Those traders that you're following may take the same trade that you actually get in behind them that make money and you lose money. How could that be? It's because of the plan that they have pre-established. They know where their entry is, they know when they're going to add or reduce potentially or get out of the stock very quickly, and you have a little bit more emotion built into the trade, not quite as attached. You're looking for the outcome. And you're saying, well, surely if this guy's been doing it for 20 years, he knows better than I should follow him. I wish it worked out that way, but I'm sad to say it doesn't. What we need as traders is to begin self-guided, a roadmap that helps us understand, build a reliable plan that's back-tested and has some data to it that we can begin to follow. Be disciplined in the approach, even if it means losing 3 or 4 times in a day, taking those trades off the table and going red for the day. Again, these are the key components. Now, one thing that we've done at Full Throttle Traders and why traders lose is because the biggest step is emotion. They let emotion wreck their head. And not only wreck their head for the day or that trade, they wreck their head for the next trade because you're carrying that over. You're going in with a little bit more double down approach on the next stock, and you're starting to say, if that one doesn't work, I got to make it back. Lo and behold, they're down 2 trades. And what we figured out at Full Throttle Traders is we have to learn, the new traders have to learn how to take that emotion away. So we have a concept that allows traders to come in the room, follow us for the first couple of minutes, allow us to get in a few automated trades where we get in and we follow a complete set of rule books that over time has proven out long term, and we get in those trades, we let those work, we let those manufacture throughout the day. When you do that, you literally, as you get into the trading arsenal at that point in time, those trades that are working in the background help reduce the temptation to get in trades. Again, a big step, a big process that people have a hard time getting is that they're in a chat room, they're hearing other people that are high-fiving, they made $1,000 and it's 9:45 in the morning. That person obviously is saying, well, why isn't it me? And then somebody else chimes in, well, I made 2,000, I made 5,000. And pretty soon that emotion, not only being in the market emotion, the emotion of others or YouTube candid shots that come in saying, how come you're not making money, forces that trader to get in very to make ill-thought decisions in the market and just end up getting into trades that they probably should not be in. Again, one of the ways to take that emotional edge off is be able to get in a series of manufactured plays that just happen in the first 5 to 15 minutes of the morning. Of course, they have to be proved out over time. They have to show a very positive, expectancy in their overall performance, a nice uptrend in the money. But ultimately, you've got to be able to learn to take that emotion off the table. We do that at Full Throttle Traders. We help people come on board, get excited, get involved in those first few trades, and then see either stop for the day, close the laptop, or close the computer down, or let them work and then let's start trading. So for example, we got in the SPX Mini today at 9:37 or something like that in the morning on a credit spread. And of course it paid full profits for us today. As I was going through this, I was trying to think about new traders trading, and I felt the emotion as this thing became profitable. This became profitable right out of the box. I felt the emotion drop. It helped me determine, like, I don't have to get into trade today. I have something that's working that has a higher than normal odds of being profitable at the end of the day. And of course, it ended up being full profit. The issue is that new traders are hearing all these things and they're rushed to get in something usually that's poor decisions because they just don't want to miss the train. They end up getting on basically a dump truck that doesn't carry them. And they could have maybe had that train earlier. For example, once we entered our E-mini today, we started scanning the market with our traders this morning, and we found the Adobe here on a day trade. We waited and we waited. Sorry, it wasn't Adobe, it was Guild down here on our day trade. We waited for Adobe. We looked at the retracement in here from the open line, the closed line yesterday to the low here, about 50-60% retracement. The key part was right in here, the market was flying. Adobe stopped. Anything that goes north off of a gap of 50%, leave it alone, okay? It's too much strength. Over 61.8, especially 75%, you can count on it. It's going to gap fill more than likely. Not all the time, but a good majority of the time. Traders try to short that big run back. We didn't. We found that this was stationary. We saw the market kicking in gear. We found relative weakness in the short term. We got in right down here, and we rode this puppy down quite a bit of ways. So now, that was all going on while our early other E-minis play was going on. Our other play that we call the $100 play, meaning that we get into trades where you can't lose. You can't lose on the trade. You're going to make either $100 or you're going to make $600 or somewhere in between. Imagine being in early in the morning, having a trade that's working like we did this morning, and then waiting a few minutes, entering a day trade, getting a full profit here, and then entering another trade that you can't make less than 100 bucks no matter what happens. The market goes up 10 bucks, 1,000 points, or goes down 1,000. You cannot lose more than 100. You cannot lose anything more than making 100 bucks. So your rock bottom loss is a $100 profit, or maybe even a $600 gain. Those are some of the things that we teach, that we follow through daily in Full Throttle Traders to help not only the experienced traders, but the new traders to realize that a lot of the reasons we make decisions are based on the moments in time, the emotions right at the cusp, or the emotions of hearing other people making money and we're getting in ill trades and then we're doubling down on that. So we have a system and a strategy that helps to kind of lower temper that emotion down here, no matter what, to keep you level-headed throughout. And that's by using some of our mechanical data trades as we move into the trading day, and then taking other trades if they set up. So I hope that makes sense. Come check us out, get a free trial at Full Throttle Traders, learn the things that we do consistently day in and day out at Full Throttle Traders to reduce that step of emotion that ultimately will make you a more solid trader. Check us out. See you in the room.